All right, good afternoon and welcome to the end of day review for today. And today is Friday, June 14, 2024, and it's the last trading day of this week. And this week we have a huge event, which is the CBI data and then FOMC meeting on the same day. So we have a huge move on Wednesday, and then we have a follow-up. We'll follow up on Thursday and Friday. Climb. We go to the chart later. And we are week 24. 2 more weeks. We will say goodbye to the second quarter of the year. And this week we end. We don't have any option expiration day, but next week gonna be huge for option expiration. And we're looking for the CBI data to cut behind now, so we look forward to the GDP data. Will be on GDP data. Will be on June. No, July 11. No. This is not the GDP data. This is we're looking for the GDP data. Yeah, that is the non-farm payroll. Here's the GDP data. We're gonna release on June 27, and then the PCE data 28. So we're looking for this week, the end of the month right there this week. Yes. So let's see. So the next 2 weeks gonna be huge because they set the tune for the first half of the year, and then they set the tune for the second half of the year. So very critical. We're gonna see any opportunity for it right there. All right, now let's see. We get back to the chart. All right, before we go into the chart, take a look at the ICT model number 1, which is the Judah swing at 9:30, and you see that right here. This is the 9:30 Judah swing, and look at yesterday. It's exactly the trade we took yesterday. So good right here. We took a good trade right here yesterday. That is fit into the ICT Judah swing. So the swing is stopped at 12:30, which is the reversal start right there. And it did rate the low of the prior day. So perfect right there. And this is the 2 leg down right there. And the low right there, that's right. Touch the low. All right, and then go up just above the low. And then one more leg down. I think the low of the 12:30 p.m. Okay. So here's the one from yesterday. Actually, it rated the low of the previous day, but it's very accurate right there. It's 2 leg down. If you look carefully, you see that 2 leg down right there. It's very good. So we're gonna track this, right? So far, we only track or build the system around the price, how the model look like for a 4 breakout and 3 breakout. But then we have to incorporate the time aspect so you can see how the liquidity run, because it's all the algo run, based on time. I've got time and price, so we have to pay attention to the aspects of time also. That help us to identify quickly a high quality setup for us right there. So that's the reason why ICT put this model in here. I mean, it's a very first model right there, model 1, and the model 2, which is showing before the A30, and then the model that have a gap down right there. So that's the yesterday happened right there, and I think we did have one more instance where we execute this model successfully. We did execute yesterday successfully. Let me look real quick to see if we will have a record of that. All right, we find the CBI, the ICT Euro swing at 9:30. Actually, in this case, it started at 9:15. Last time it happened is in May 16, the day after the CBI right there. But in this case, it's a short setup. And if we go in right here, we have a huge swing right there. Or if we go late right here on a PM session, we still have a huge move right there. But anyway, it's very interesting when we see side by side the Euro swing at 9:30. It's very interesting. One is the long setup, one is short setup. So the one on the left, it just happened on Thursday, the day before. I mean yesterday, right? After the CBI, and then it start. I have a Euro swing at 9:30, and then it's a down move, 2 leg down, and then it's a reverse. So, and it rate the low of the prior day right there. And right here we see the signal to short also, because we see that signal right there. We see the setup before, right? It is a failure swing or second leg up failure right there. That is setup we saw. If we want to catch this move, we can catch, or we can catch the reverse move right there. But the ICT model infer that we're gonna take the reverse move. So if we are good enough, we take 2 moves right there. There's down move and then there's the reverse move. The same thing happened, similar, I mean not exactly. This is a short setup happened a month ago, exactly the day after CBI. You see that the CBI right here, the day right there, it's huge move up, and then on Thursday what happened? You see that it rate it rate the buy side. See that right high, and then it reverse. And the time window is just a little different. It reverse start at 11, and then another reverse start around in the PM section. But for the day, for yesterday, it start at 9:30, and at 11, around 11, it have a retracement, and then it makes second leg down, and the reverse will start at 12 p.m. 12:30 p.m. Right there, p.m. right there. So at least we have in our hand that the model, the ICT Euro swing, 2 model right there. They are, one is long and one is short, but they happen to be right after the CBI day. What a coincidence right there. It's beautiful. Yeah, that's the thing we want to point out real quick for review today, that the Euro swing at 9:30 from ICT is it's one of the very high quality setup that we need to pay attention, because the time based on time, right? That's the whole idea right there. All right, now go into the charts and see what our what trade we took today. Let review the trade we took today. Today we make some mistakes and we learn the lesson. So let's go with our very first trade. All right, here's our first trade, right? When we see this right here, we go in at 9:15 because we see test from below. You see that at the level right here at 16 or even 17 right here, 14 right here. Step below 1, 2, 3, 4, 5. So the only reason it come back is to break that level. Perfect. That's the whole idea. All right. Now look at how we execute the trade. All right. So we put the buy stop right there at 16, 50. The accurate one will be 25, but we want to make sure to, 1 pip above. Because sometimes it just tap that price and then it fall, it run away, tap and it run away. Perfect, we get entry. So we get entry about 9:21, which is 6 minutes into the candle 9:15. So perfect right there. Then it go into our direction and back and forth. And here's the interesting part happen. Perfect right here. We'll have 200 right there, which is 1 hour. 150. So it's almost 8.5 hour right there. And right here, we think that it's gonna reach our level, but here's the trick. It come back, and it make us down ourselves right there. Because right there, we thought, wow, it's gonna be what? It's gonna be reversal. Because it tests from below 4 times, and then it's what? It break, and then it reverse. It can be happen in that case. And at that moment, when we think about that, we what? We just we close out a trade. When we think about that, we get scared. We close the trade, but we should not do that. We either move the stop loss, right to close to break even. You see that we got a little scared right there. We should have to move close to break even, just below break even right there. We still in it. You see, after that, it go up. Yes, so it hit our target right there. If we stay right there in the trade, we hit our target right there, 1 hour right there. So that's the mistake we make on our first trade right there. So somehow we are kind of not so sure about the trade. So that's our mistake right there on the first trade. But we got our break even, because right here you see that's our break. We thought it's gonna reverse. It's gonna reverse right here. But we should not move. Get out of trade. We should not even move the stop loss just 1 or 2 pips below the entry right there, which is this point right there. Just stay in trade. So that's the lesson we learned right there on our first trade. And now let's look at the second trade we took. All right, here's our second trade, which is at 12:30 right here. So the first trade we take around 9:15, and then we didn't do anything until 12:30. Here's our logic right here. It did level. You see that? It tests from below 1, 2, 3, 4, 5, and it break it reverse, then there's no reason to come back here. The only reason to come back here is to break it. So that's the reason why we put our buy stop right here. But next time we should not do like this level. It's better to go at this level. You see that? The same idea right there. We go in lit level, give us a better margin for loss right there, better stop loss for it. And that's one of the reasons that we exit the trade early right there, because we going too high right here. It's okay for it to be test a lot level. It's as long as we think this candle, we should be okay. That's the whole idea of the trade number 2 right there. So it breaks, so we put a buy stop right here, and then we get into the trade, but this one go a little bit too deep, we're a little bit scared, and then we exit the trade also. So let's see how we execute the trade. So right there, you see that 9:30, right? Okay, so we put in the buy stop. We draw a level and push price up right there, because there's no reason for it to come back to that level, because only break. Okay, so perfect. So we go in 12:30, so it's 13 minutes of the 12:30 candle, so 2 more minutes it will close that candle. Perfect. We thought it closed up perfect for us right there, and we thought that it's going to continue, but then it retraced just a little bit, and we get nervous. See that? And we should not. We already moved the stop loss, so why we are close the trade? If we let it at 652.25, is it gonna hit? Yeah, we get scared. Let me see. So the retracement down to, yeah, if we stay in trade, we will get stop loss. We can move stop loss. So we should not move our stop loss in this case. Where we're going? $23.25. So if we leave our original stop loss $23.25, what the low of it? Oh, 20. So really pull back deep right there. Yeah, we still put the original is still there. So it's very tricky, because you see that it's very consolidated right there. The best for us after a big win tomorrow, we should not, trade today at all, because you see that it's like climb upstairs right here. It's very, back and forth. It doesn't have, a huge move like this move. You see that? It just climb back up right there. That's the lesson we learned. All right, that's trade number 2, and let's see what a trade number 3 and 4 we take. All right, here's trade number 3. But before we go to the trade number 3, we watch trade number 2. How we get out, right? We go long, but we move our stop loss too tight, because we don't give it enough room. We should get room, so we get out. We get out of the long trade. Then now we go to the trade number 3, which is around the same time, right? We get our trade number 2 at 12:47, 12:48. We go in. We do what? We do sell. We say, well, if we break the level, then it must be short, because it break and then reverse. So we thought that it's gonna be reverse. That is our idea right there. Yeah, go back to the chart right here. That is happened. What happened? Yeah, right here at 12:45 right there. This candle give us a hard time right there. It back and forth. And at first we go long. It's right, because it's reverse level. but we get scary right here. We got out of the long trade, and when it moved down here, we thought, wow, we're gonna short them. So we try to short them. That's how we get in with the trade number 3, and we short them. Short them, but look, we would stop loss too tight. We got out. We got stop out. So that's good enough already, right? We should be stopped right there and reset our mind. Instead, we get mad. we cannot accept that. Wow, how that happened? So we FOMO right here. We say, wow, we're gonna break out. So we're not gonna miss this move because it flipped on us twice already. So that trade number 3, and then now we enter trade number 4. So, but actually, this trade number this cliff for 2 trade. Trade number 4 and 3, 3 and 4 right there. Both of them is disaster. we make a huge mistake. Oh well, let's open again. Because we renamed the file, so that's giving error. Okay, so that's a trade number 3. And now we feel like, wow, look at that, it's gonna break out. Right, so 5 minutes into the candle right there. So we increase the size. We said, wow, we're not gonna mix it out, it's gonna hit 54.32. So we increase the size to 5. See that? Boom. But the thing that we put a stop loss too tight, my friend. We have to go down here. Yes, we go down a little bit, but it's still not enough because it's okay. We move up there, right up to that level. If we leave there, it hit our target already. You see that? Oh no, it not even hit the target. We already moved. Yes. And we thought that it's gonna go all the way. It looked like that. Do you see that? Yep. And then it retreat back, trace back, boom. See that there? And then now our loss, it goes to 8 or something. It get even more mad. We say, wow, we cannot accept the loss. And you know what? We try to sell. Can you believe that? We try to sell. We say, oh, wow, it's gonna be back again. You see that? So we buy and sell in this candle 4 times right there. So this is trade number 5 right there. So we have to aware of our our emotion right there. Have to be mindful. I think we out control on those. That's area we need to work on right there. So actually, if this clip is 3 trade in here, trade number 3, number 4, and number 5. Yeah, we just rename the file. So go here. All right, so get out. Right, that's trade number 4 right there. And now we're gonna see if we go to trade number 5. We said, wow, we go down, then we start selling 4 more right there. Same thing happened. And you see that? Because we hit the sell for 5 contract, but the risk reward only set up for 1. That's the reason why it hit right away. We lost right away. See right here. We FOMO right here. We should learn our lesson. Don't FOMO. It's okay. Take a lot to reset our mind. You see right here? Sell. Boom. Yeah, you see that? So we set up the risk reward ratio just for 1 contract, which is $150, get 250. So even though when we buy 5 contract, the ratio is still there. So that's the reason why I think Top Step should not add the feature based on the ratio, not based on the exact amount of money. It should be a pawn, so we don't have to worry about that, because a pawn is no matter what contract you do, it's just based on the pawn, not based on the exact money. Maybe that's the way the Top Step do that, so you know more people will fail so they can make more money on the subscription. That could be the reason. You see that? So we got failure. So that's it. Trade actually is trade number 5 and 6 right there. Yeah, let's add. So it's 5, 6 trade. That's amazing. Yeah, so this one is already so far we count 5 3, 5 number 3, number 4, number 5, and now we're gonna take trade number 6. Yeah, we just rename them. Oh, we show our control right there. Alright, so that's right, trade number 5, and then we're gonna take a trade number 6 right here. See what? We go back, we're gonna change the ratio again, because we're gonna increase the size. Can you believe that? Okay, so it go back and forth right there, move very slow. That's one of the key things that we should not trade on a Friday, especially after the CBOR data. The Thursday and the Wednesday move very big. And all right, so now it's back again, and let's see what mistake we made. And then wow, it go back, so we buy 10. See that? We put the mouse right there. All right. No, that's it for that trade. So it's 4 trade right there. And what? Yeah, that's this cliff is just for 4 trade, from number 3 to number 6. Right here. This is the number 3. Boom, number 3. And then number 4. Yeah, that's the number 5. 5 right there. Yeah, wait, 5 trade. I think it's 5. So 3, 4, 5. And 6, maybe 6. We don't even know exactly. And here's our last trade. Here's our last trade. Okay, let's open our last trade. Alright, here's our trade number 6 and 7, which is the last 2 trade. So you see that after this candle at 12:45 close above that, and we think, wow, we're gonna go to this level for sure. So we try to go all in right here. We buy 15 contract. Can you believe that? That's so desperate right there. It's okay to lose 1,000. Yesterday we win 4,000, but because of we hate to be lose, right? That's the one of the emotion that we need to work on. We have to accept the loss. Otherwise we let the the revenge trade take over, the revenge emotion take over, we not make the right decision. And it's exactly right here. we expose ourselves right here. All right, we buy right there, but the minute it come back our, against us, we nervous because we FOMO. We have no conviction. We have no setup. We just FOMO. That's the beauty of the FOMO right there. That means you just out of control, just in the panic mode right there. And you see that we try to close. We don't have any conviction. We should leave it there. You see that we close. Just move a little bit. We close, and as soon as we close, we short them. Yeah, you see that? Let me see. All right, we close. We close. We close the long position. Let's see. Yeah, we close position, and then we go back. We sort them. Oh man, go sort them, and look what happened. You see in the charts right here. Go back to the charts. Where are the charts? Right here. That is right here. This right here. It's just back and forth. If we let it go with the long position original, we should be good right there. We get all our money back right there at 54.32 right there. But it's just we have no conviction, and we just FOMO. That's the danger. The lesson we learned today. If we lost, then take a lot and walk away. A couple of minutes, come back, reset ourselves. Otherwise, we be panicked right here, and we throw the money away. We give back our gain right there, and it's a very horrible situation. We don't want ourselves to be in this situation because the cortisol, the panic mode that our body is produced, it really drive us our decision right here. We should aware and mindful of that, and stop, go somewhere, step away, and reset our mind right there. That body it really control us right there. And we go short, and look at that, we already get lost 3,000 right there. Oh man, it's amazing. We expose ourselves right there every day in real time. And you see that we go short instead be stay in the long. We take a loss 2,000 and we switch back to short them. We said, wow, now it tests from above, it's gonna break it, but it will not. Remember, it will test above and break it when there's no back break and reverse. Whenever we have break and reverse and test from above, is for going up. That's always the case. Whenever this guy hang up above, then you may have break out for break like this case, right? You have break this one up and then it's down. There's no reverse before that. There's no reverse candle, the same sign with this candle. Whenever you see that, and then it's a test from above, that's where it continue. That's the lesson we learn. Whenever we see the test from above, it not always will break this level. It depends on the location. If the location up here, it will make a second leg up. But if the second right here, the location right here, it will reverse. And also based on this, reverse right here, break reverse, that's the thing that we need to pay attention. Because we mistaken right here. We thought that, okay, so it's gonna break, right? Break, and then test from above, it's gonna reverse. No, because look at here. This already break before that. We have to be put in the contact right there. Test from above and rise. It not test from above and break it. We have to to add that into our vocabulary right there in our setup. Otherwise, we make mistake right here. That's a good lesson learned for right there. We used to thought you think that test break and test from above will break it, but no, it's not only the case. It depends on right here. We depend on the candle before that. Let's take a real quick on the setup right here. Okay, the mistake is right here. All right, we thought that when it break the level, if we test from above, then it's gonna be reversed. But look at this. This is different. You don't have any candle before that break the level. No, at all. This is candle stand by itself. So right here, this candle is not stand by itself. It already have the Dow close candle before that. So the test from above will not break the level. It's just a retest before it draw a second leg up right there. That's the huge lesson right there we learned for today. That's so beautiful right there. So just go through one more time so we can make sure we get it. So before today, we thought that whenever it break level, because we thought it's gonna be this setup, break the level, retest from above, then it's gonna reverse. That's what we have in mind. But now we see the detail a little bit different right there. So this guy, you don't have any candle before that really Dow close. No Dow close candle. The location is on the top. The same idea right here. Right here, is the short right there. Break, retest from below, and reverse. We thought the same scenario we're gonna play right here. Break, detach from above, and then on reverse. That's the reason why we get our long position. Our long position is the formal right there. So we get our long and we go short, but that's the mistake we make. Right? If this candle stand above right here, then test from above we reverse, but it's right down here, and we see the pattern right there. It break and it reverse and test from above, and it can continue to go. So that's the huge mistake we make today. Look at this is the new setup or brand new setup we learned today right there. It's the pattern we see. So basically it break the level, test from above, reverse, but it do 3 times. You see that? Break and then test from above, reverse. Same right here. Break, test from above right here, break, test from above, and reverse. So it's make the second leg up. That's how we do that. So right here, the test from above is not to break, but it to continue to climb up right here. That's what we call climb up right here. Second leg up, but it's climb up. It climb up. It's not really expansion right there. So we should be careful when we see this kind of pattern. Try to avoid not trading as much as possible. But if we do, just do small side and be careful with this, because it can fluctuate right here, and we got a big trouble if we don't handle the size correctly. Yeah, so we see that right there. So that's the mistake we make on the last 2 trade, number 6, 7 we make, and we increase size 15. We sold desperate to get what we lost back, and we paid the huge price. Boom. We got stop out because we reached max loss for the day right there. Yep. But if we are, you see that it reached the 42 right there. If we stay with the long trade, we hit our target already. But the long trade is also the full moon at the beginning, and the short trade is we mid trade right here. The signal right here is enough to short, but too long. But anyway, as the good review for today, we learned a very valuable lesson right there. That one of the key lessons is that it tests from you see right, it tests from above. It does not mean that it's gonna be reverse for last time. You see, for this one, that's from up reverse. That's right. That's from above reverse. That's right. That's from above break the up reverse. And here's the last one. There's no reverse. You see, after 3 times. This one, after 3 times. Oh yeah, that's what reverse. And this one will be break it and continue right there. Very tricky. Try to avoid as much as we can. Anyway, thank you for your time and interest, and we're always grateful for the opportunity. We do what we love, and success come our way. Bye for now. Have a great evening.